Good day to one and all. This is Dr. Sivaraman of iknowindustries.com. So I'll be presenting Asian session live market analysis for this particular week, 13th to 17th of January. Today is 13th January between 5 and 5:30 GMT. I'll try to explain to you the derived forecast and also the levels in which the currencies could swing around in this particular week. And later on a daily basis, you can just fine-tune it using the market reading technique, what I explained every time. So the derived forecast, I'll present it now. So it is actually a statistically derived forecast. And last week I was explaining to you that Euro and GBP are expected to gain levels. And what happened till Thursday, they have been doing the lower level consolidation with a downward stop and started gaining in a big way after the non-farm payroll. Because everybody was expecting the non-farm payroll could be of a higher nature and Euro and GBP could undergo further drop. But as per the expectations of the forecast, the US dollar weakened in a big way. And that is just the start for this particular month. So we will find that the continuation of the gaining levels in the case of Euro and GBP and dropping in the case of USD-Yen in this particular week. And earlier, last week, I was explaining that from third week, the currencies are expected to show the USD gaining move. But for the want of volume, the players have done the prolonged consolidation last week till Thursday. And Friday only they gained the levels in the case of the majors. So against US dollar, as a result, US dollar weakening move started only after about 4 days of last week. So when they have just done the lower level consolidation with a downward stop and for about 4 days and gained the levels on the fifth day, they are expected to continue the gaining move during that of the early part of this particular week. And only on Friday, they could go in for the profit booking move. So keep in mind that the players are here to book profit. That means they will not drop. To book profit, what they do is they gain the level and book profit. Gain the level and book profit. So in that process, traders will become bullish. And when they are selling at a higher level, the traders will find it very comfortable to buy it at a higher level. So they have to create the market sentiment for that at a higher level. Only then the traders will freely come and buy. Otherwise, anybody will use the common sense and say that when it is available cheap, I should buy. When it becomes expensive, I should exit out of that. But in the market, what happens? When the market sentiment is created, the herd mentality is being triggered. As a result, the traders are willing to come and buy after the gain and willing to sell after the drop. So this time, from time to time, they try to use as a tactic to misguide the traders. And every time the traders realize that it's not the appropriate way of doing it, but in the name of breakout trade, they try to enter into the market after the gains. And we cannot help it, because that is a normal tendency of the traders, because everybody thinks that using the common sense may be nonsense in market. And especially when there is a breakout trade, immediately people think that we should buy after the gain so that further gains could be seen quickly and we can book profit. But as I explained that during that of the Tracking the Forex Market Together webinar, unless and otherwise they breach the high and stay above there for more than 30 minutes, if you go in for a breakout trade, then it will be disastrous. But anyhow, in this week, they are expected to gain the levels in other majors. As a result, US dollar is expected to weaken. This is only a mechanism by which the players earn money from that of the market. And it is not a real impact on US dollar or any other currencies, because they invariably make about 200 to 300 pips swings in the market, and in that we try to develop the sentiments just like that, and the players are able to easily handle the traders and try to confuse them and try to earn from them very easily. So it is the second week of the month, and especially the year beginning time, because as I explained, the yearly trend reversal will prevail during the month of December and January. So we are in the month of January. The trend reversal moves are here to stay, and that means volatile moves. But they will try to make upward moves. Not a very big upward move, but they will try to make the upward move and try to see that they buy 10,000 lots and sell 20,000 lots. Buy 10,000 lots and sell 20,000 lots. That way they will try to gain the levels in the market. Especially in the dropping market also, they sell 10,000 and buy 20,000 lots. That way they try to drop the market. But people think that it is a falling knife, so we cannot afford to buy it. Or it might be very risky to buy in a falling market and very risky to sell in a rising market. So the market fear is created by giving the various type of sentiment triggering statements. So people will say the trend is your friend. Once the trend reversed, immediately they say that stop out and trend is your friend. Then afterwards you continue that and they will say trend is your friend, and suddenly the market will reverse. And there is no address with regard to trend reversal. So you come across the intraday trend reversal, weekly trend reversal, monthly trend reversals, etc. and also the yearly trend reversal. Now we are under the process of yearly trend reversals. Why the players do such trend reversal moves? In order to confuse the traders, they have to necessarily do that. So what they do is normally, if they continue to do it in a range of 200, 300 pips, so whenever they gain, immediately everybody will start selling it. And when it comes down, everybody will start buying it. So the players cannot make money. So what they do is they gain the levels and everybody starts selling, then further gain it. Then immediately those who have gone short will come first and buy it from them. And the players sell it at a higher level. Then afterwards, the traders think that, okay, it is a buy and sell market and continue to accumulate more buy position. And the players silently drop the market. And the traders will think that, okay, in a dropping market, we can do the averaging because already we have taken the buy position. So try to do the averaging. They make further drop and drop, so that those long holders come and liquidate it in distress condition. So this sort of trend reversal moves are nothing to do with the fundamentals. It is mainly the players wanted to deceive the traders in such a way. In the process, we try to use various type of charts and moving average charts, etc., to find out where exactly the reversal is going to happen. But especially when the fundamental data release is anticipated, nobody look into that chart and they just look into the fundamentals and say that, okay, because of fundamentals, the market direction is changed. So every time we face this song and we try to find out what could happen in the market, we become curious and we become surprised and we continue to give importance to that of the emotions as a result. And some trades we earn, some trades we lose. So ultimately, if you could get the guidelines with regard to the exact moves, what you could see during each sessions of the day, to a certain extent we will be able to fine-tune our trade, probably using other studies, etc. Hence, I give the expected market moves for the week. So today, 13th of January, swing and rise moves are expected during that of the Japanese session. And afterwards, swing and slide moves could be seen after some gaining of some levels of the upward stop. And Euro and GBP we are expected to make the slide during that of the late European session. And then later on US session, they are expected to swing and rise again. And that rise will become a visible rise. And that means they will be able to gain about 45 to 75 pips during that particular time. Then 14th, tomorrow, swing and rise moves are expected during the Japanese session. And after profit booking, the players will drop and quickly buy against that of the sells and then make a quick rise during the European session. And later on, swing and rise moves could be seen during the US session. Then 15th, swing and rise move is expected during the Japanese session. And then again, a swing, high-level swing, and a slide could be seen during European session. So normally you come across in this pattern of moves that they discourage the European traders holding the long positions in Euro and GBP, and when they hold long in Euro and GBP, they induce them to liquidate it. And during the US session, when the traders think that, okay, US dollar is going to gain and take positions as sell positions in Euro and GBP, they gain the levels. So this is what they create the sentiment and act against the traders. Then 16th, swing and rise is expected during the Japanese session. In all the days, you'll come across the swing and rise moves, and sometimes the gain might be much bigger, sometimes it might be optimal of 30-40 pips. Then again, during the early session, they will make a dip and then a nominal rise, and swing and rise could be seen during the US session. Then 17th, we'll come across the higher level swings with a dip and a rise and a slide. There will be profit booking moves on Friday. And swing and quick rise could be seen in order to induce the short sellers to go in for a short covering. Because after gaining the levels, normally the traders tend to sell further and average their sells and see that they'll be able to come out of that with net profit. And invariably in that process, what happens? The players try to dip and induce the traders to sell as an average trade. During the rise, the traders fail to sell, but after the drop, they try to sell as an average trade. Then again, they gain the levels, and then the traders go in for a short covering. Then later on, see that they are making the slide. Then after the slide, they'll think that, okay, Friday weekend, there is going to be more selling coming as a profit booking move, but they will try to swing and quickly rise the market. And so, always keep in mind that the players are here to create the market sentiment and act against the traders. So invariably we all join together and support the players in endorsing the market sentiment. So we vociferously use the term bullish and bearish alternatively without understanding why we are changing it just so quickly for even 20-30 pips move. Some people use it for 50-60 moves. Some people use it for about 100-200 pips move. But in a week, they can make easily about 300 to 400 pips. And I don't know what to call it as bullish and bearish. This is all nothing but the market rise and the market fall. So alternatively, they try to gain the levels and lose the levels in order to see that the traders get caught vulnerably, so that their emotion is triggered and they go in for a distress liquidation of the positions. Why most of the time the liquidation of the position happens among the traders? Because of over trading. So if one avoids over trading, whether you take a sell or a buy position, and even if you want to trade without a stop and take only a very minimal position and see that you are able to see a decent profit in that without adding further positions, we'll be able to earn. But unfortunately what happens, we think that we are very smart and try to go in for an average trading without understanding the average has to be done of 100 to 150 pips if you want to trade doing the averaging without a stop. But when they just quickly gain about 20 pips and hold, then people think that, okay, we'll average it by taking another sell. Average it taking another sell of every 20-30 pips. Then when they gain about 150 pips, then all the positions start making loss. Then the usable margin erodes, or the free margin erodes 5 times than that of the earlier occasion. So ultimately, we only commit the mistakes. The players are not committing the mistakes. The players are very, very determined, and they do not risk even $1 of their money. And they get all the informations from that of the possible sources and try to move the market depending upon the traders' pending positions. See, even when you have about $5,000, $10,000 in our account, we become so cautious, we use stop, etc., and try to see that we don't wipe off the account. So when the players using the billions of dollars in their account and trying to trade, do you think that they will take such a risk? They don't even take 1% risk in the market. And they try to get the exact information where the traders have committed the positions and then make a very big drop using some trigger. Then all the long holders come for a liquidation and they earn the money. Then later on, after buying everything, they quickly gain the levels. On Friday, you would have noticed that for the non-farm payroll release, they just gained about 35 to 40 pips to start with during the European session. And after gaining the levels in the case of Euro to 1.3626 and in the case of GBP to 1.6450 level on Friday after the non-farm payroll, because before the data release, they made a real downward stoppment. And as I explained that always they make a false move before the data release. And we'll be wondering, okay, when they had done the downward stoppment, they already know the data. So that is why after the data release, they are able to rise the market. And later on, we find that after a small gain, they start holding it. We have to understand when they hold only about after gaining about 30-40 pips. And people think that, okay, the market is not having the strength to go further up because the European crisis is still there or the UK economy has not really grown big. So immediately the people will think that a bigger picture about that of their countries and liquidate their buy positions with 40 pips profit booking. And later on accumulate all the sells. The players accumulate all the sells and gain. Why they should accumulate all the sells? Only then such people, those who have gone short after liquidating the long, will come for short covering when they rise. And if everybody is holding long position when the players rise, nobody will come for further buy and everybody will be willing to book profit. So only if they trap the short sellers, the gaining has got a meaning so that they will come first to square up their positions or go in for a short covering. And when they see that they are holding high for a long time, then immediately they turn long. So for that, the charts help us really very much and immediately says that, okay, the support turns resistance, resistance turns support. So we get convinced and then try to do a buy at the higher level. So the players are here to make the intraday swings and then gain the levels in this week. Okay, what about third week? Third week, they are expected to bring in a high level consolidation and a profit booking. So third week, if you try to take long positions, and probably they may not show you profit. But similar to that of last week, how for 4 days they had done the lower level consolidation in the case of Euro and JBB, making only about 25 to 40 pip swings between the high and the low, all the 4 days. And finally on Friday they gained the levels. Now this week they will gain the levels and make the higher level consolidation next week. And afterwards the last week we will come across the drop in the case of Euro and JBB and everybody will forget about non-farm payroll and people will start talking about European crisis, etc. This is how the market is made. Now with regard to the levels, we could see in this week, the low could be 1.3650 in the case of Euro and 1.3925. This time they will try to go into the new high so that the traders turn bullish so easily. So far they have gone up to 1.3681 and they have done already a upward stop about that and holding around that. Then in the case of GBP, 1.6477 is the currently shown, 1.6450 could be the low, 1.6725 could be the high. And you know that last time they had shown 1.66 area and from there they could gain another 100 pips so that traders will easily turn long. And you know that GBP is the currency which is used to create the market sentiment. So they will create all along the bullish sentiment by gaining the levels in the case of GBP. And when all turn long, the players will show the true color. Okay, you just forget about non-farm payroll. You think about the economic conditions in Europe and UK. So better liquidate the longs. Then it will come down drastically. Then USDM could come down to 101.50 and 104.50 could be the high. You know, last week around 104.50 to 105.50, they have been consistently making the higher level consolidation in the case of yen in order to make a drop and book profit. Today, during the start of the session itself, they made the drop of 75 pips straight away. So this is how they don't give any trading opportunity for that of the traders. Only those who have gone short on Friday will be able to book profit. Otherwise, they have not shown such levels and quickly made the drop and continue to breach the low, what they set step by step. So it becomes, unless and otherwise you know tomorrow's forecast, it is very difficult to trade in the case of USD yen. In the case of CHF, 0.90 could be the low and 0.9275 could be the high, and they are expected to make the upward more slowly. They will try to make a lesser drop in the case of CHF when Euro and GBP are gaining, and whenever Euro and GBP stall or consolidate, they will gain the levels in the case of USD CHF. In Canadian dollar, you know that on Friday, when Aussie was gaining, Canadian dollar was also gaining, and they made the contrarian move that way in order to handle the commodity crosses, and Aussie used the different story, and Australian dollar used the US dollar weakening story. So actually, Canadian dollar gained, or Canadian dollar lost, or USD gained against Canadian dollar, whereas it has lost against Australian dollar. That sort of contrarian move, they try to do it in order to handle the respective crosses, like Euro, Canadian dollar, because that is the currency wherein a lot of traders take sell position, buy position, etc. So they just made a trick and induced them to liquidate or induced them to go in for a big short covering. So Aussie could be trading around 89.75 to 92.75. So these are all the mathematically derived ranges in which the currencies are expected to make the moves. So it will be more of a higher level consolidation. They will try to do it in a day or two. They will gain quickly the levels and start making the higher level consolidation and induce the short covering, a final short covering on Friday for that of those who are holding their short positions or sell positions. And later on next week, they will try to consolidate briefly at the higher level and start making the drop. And so you watch the weekly trend reversals and try to understand that during that year beginning time, they are likely to change the sentiments very quickly. It is not that throughout the month they will continue to hold the same sentiment. They will try to change the sentiment alternatively every week. And that is how they try to confuse the traders, because they wanted to earn as much as possible during the year beginning time. Similarly, during the year end time, they try to earn as much as possible in order to improve their books of earnings. Now, with regard to the market reading, so today Euro formed the low 1.3662 and 1.3681 was the high, and they just breached and formed 36.85. So we can understand that they are trying to breach the high. And in the case of GBP also, low is intact. The high they breached by 2 pips. And USD yen, the low is 103.26, 104.14 is a high. They just briefly showed it and quickly made the drop in the case of USD yen during start of the session itself. Then in the case of CHF, 9007 is the new low and 9010 is the low. They just made a brief downward stop and still holding below. So there is a chance to go below, briefly below the psychological level, 0.900. and 0.9029 is the high. Wherever the spread is low, you will avoid taking positions in that. And Canadian dollar still it is showing flat or a positive net change along with the Australian dollar. They are simply holding, making a high level consolidation in the case of Canadian dollar, and they will try to build sell positions and create the fear that it could go to 1.10 level. And then you know that psychological levels help a lot the players in order to trigger more fear among the traders. So they will try to hold near that of 1.09, build sell positions, and suddenly start making the USD weakening move in the case of Canadian dollar as well. At that time, USD CHF will be gaining the levels. So they just make all contrarian moves in all possible ways in order to handle the respective crosses. So you have to understand what cross they are doing it by looking at the other currencies. See now here. When the majors are doing the USD weakening move, the commodities are showing the contrarian move. That means they are handling the commodity crosses. Then Aussie, 89.86 is the low and 90.42 is the new high. 90.35 was the initial high. So they have started gaining the levels, and so they just made the gain and come below that of 90.35, a brief upward sharpen, and they are expected to make slow gaining moves in the case of the Aussie. The dips are buy opportunities in this week in the case of Euro and GBP. My sincere advice with regard to the trading strategy will be, don't simply jump into the other market. So you look for the initial lows and the highs and wait for always a quick move during early and the late sessions. And when they make a quick drop, understand that they wanted to hit the stops on the downside and then try to gain the levels. At the time, enter into the market. When it is simply consolidating, don't think that, okay, this is the statistical level calculated or the pivot point, so I'll immediately enter into the buy position, etc. When they are just consolidating it, definitely before rising, they will make a small dip. And if they want to make a drop, they will make a small rise and come down. So when they make a false move, then try to enter into it. That sort of false moves will be seen during the early and the late sessions. So in between, during the mid-session, if we try to commit positions, your holding time will be more. Instead, wait till 6 GMT and see that 6 to 7:30 GMT, late session, they are trying to make a dip. In the case of Euro and GBP, before making a rise, at the time buy it so that you will be able to keep easily stop at entry. So these are all fine-tuning technique of the trading. And also, if you want to buy, don't immediately jump into that other market, because market is here to stay forever. And also, it will try to continue to give trading opportunities. It is not that if you miss the level, you will not get it back again, because the players need to make swings. They will pretend as if it is going to go up so that the traders will come and buy, or short sellers will come and do the short covering. Then again, they will make a dip, because they lighten their position before making further rise. So they need to hold and book profit of their holding buy positions, what they accumulated on Friday, and then make a small dip. Then the traders start selling, then absorb all the sellings and quickly gain. Why they make a quick gain? So that they buy less and gain more levels. So that is why I always say the quick moves are false moves in the market. So when they make quick moves, quick drop, you try to buy. When they quickly rise, you book profit with regard to the buy positions. So you can do the buy and sell trade in the majors this week. And also follow the market timings while doing it. Choose the early sessions of the 3 sessions and watch the moves and see whether they are making a downward stop or a false move on the downside, and then try to take a buy position and book during that of the late session the profit. Similarly, here one and book profit. Here one and book profit. You can easily do 3 swing trades or intraday trade if you want. During that of the Japanese session, you buy, keep stop at entry and trail the stop in a profit-making position. Keep about 45 pips. If they are coming closer to that, raise it to 75 pips. You will be able to book profit by the end of the day. So keep in mind, always they handle two pairs at a time. So identify what are the two pairs they are trying to handle it. Then accordingly take positions. Don't have any sentimental attachment with any currencies. Suppose already a currency has made the move, don't chase it and look for alternative trading opportunities. See, in the market, you will come across either a buy and sell or a sell and buy trading opportunity. Ultimately, what we need is a profit of 30-40 pips. So look for it and try to do the trade objectively without becoming emotional or without developing the market sentiment. Don't join the herd of traders developing the market sentiment. There are so many factors to induce us to become bullish and bearish. But we need to be clever. We need to be smart and say, okay, they have the feeling, let them have it, but I am here only to do buy and sell or a sell and buy trade to earn money from that other market. I will not be able to strengthen or weaken the economic condition of any of those countries. I am here only as a trader. If you realize your real position, then you will not be talking about the people who are making economic decisions and also governing the country, etc. And they also have their own advisors to do that. And whatever the advice we give it in our chat or whatever it is, that is not going to be heard by anybody. So understand your real position, understand you are a small trader in the market and you are here to grab the profit and nothing to do or nothing concerned with giving advice to the respective countries or giving advice to other traders. Because ultimately, we need to see that we don't become emotional. Only then we will be able to give advice to others. If we become emotional during quick moves, that means we are not mature enough to trade in the market. Okay. I come to the last slide. So I take this opportunity to thank FX Trade for the facilities provided, and I'll try to answer to the questions which are asked here. Meanwhile, Thursday, 16th January, I'll be giving 3 webinars. So it is a coincidence that Thursday I normally give the review of the Asian session live market analysis. I'll just find out whether the market has moved in tandem with the forecast or against it. Then followed by that will be between 5 and 5:30 GMT. Followed by that 9 GMT, I'll give part 1 of tracking the forex market together webinar. During that, I'll explain in detail my trading techniques. The basic trading techniques only I'll explain. There are other trading tactics and other strategies, but I'll not be able to give it during the webinar. But this basic trading strategy will be able to help anybody to earn consistently from the other market, provided you have the patience and wait for the opportunity to enter into the market and exit out of that, rather than become addicted to trading and try to hold some positions, pray to God that market should move in my favor. Instead, when they make a quick downward move, buy, quick upward move, sell. It is not simply a contrarian trader. We need to find that the new low is not being breached for 30 minutes. And similarly, new high is not breached for 30 minutes. Then we can just do the counter trade. So these are all fine tuning of the counter trading technique. So that I'll explain to you during part 1 of the webinar. I'll take the positions live along with you. And by end of the European session, I will close the positions in front of you and show you how the profit can be earned during session-wise trades. Then George has got a question. Dip and rise means dip in first session and rise in late session. See, I explained that each session is divided into early, mid and the late sessions. The dip will be confined to that of the early session and the rise will be to that of the late session. In between the mid session, they will be doing the swings. Then Mohan Kumar, in your view, right now, what will happen to Euro Yen? Because last 4 hours, market is in minimum move. It's okay. As far as Yen crosses are concerned, the players have already made the move in the case of USD on the downside, and Euro and GBP are expected to gain the levels. So as such, you will not come across much of a big move in the case of Yen crosses. They will try to consolidate here. Then during the year session, they will make for the drop in the case of Yen, holding Euro and GBP initially. At that time, there will be further drop. So whenever they are not handling in a contrarian way, the majors related to Yen, as I explained many times, that Euro and USD Yen are to be watched for Euro Yen moves. Euro is showing positive net change, Yen is showing negative net change. So obviously they are making the USD weakening move. Will not come across much of a move in the case of Euro Yen when they are making the regular move. When they are making contrarian move like Euro going up and USD Yen also going up, then you will find more upward move in the case of Euro Yen. And similarly, when they drop Euro and drop USD Yen, last week they have been doing it, and that way they will be able to drop more the Euro Yen. So read them and understand what they intend to do, rather than simply speculating with the help of the supports and the resistance or whatever it is. Then how about Euro and GBP? Euro and GBP are expected to gain the levels in this week. Today as well as in this week I explained it. Tell me about USD Yen from here or some correction for uptrend. See, as far as USD Yen is concerned, they made a quick drop and more than 75 pips drop, they have done it. So a small pullback, they could do it. And those who have been holding long positions from Friday, they are not being given profit booking opportunity. Because from 105, they dropped it to 104 on Friday. And without giving a pullback, they just dropped it. So any level who has taken the buy positions in the case of USD Yen with a bullish feel will go in for long liquidation. As the day proceeds, when the pullback is not happening, more people will come and sell USD Yen. So no downside could be seen in the case of USD Yen. Then John. Euro USD and GBP USD furthermore. Yeah, they are expected to make an upward move, sir. Then any. Does your weekly forecast, that is dip and rise, refer to GBP? Yes, they are all pertaining to the top Euro and GBP. The numerator currencies in general. But earlier, even Australian dollar was part of it. But now they have finished the yearly trend reversal in the case of Australian dollar. So which will not be equally participating when Euro and GBP are gaining the levels. Euro and GBP are the maximum volume currencies. So they will try to make the volatile move. That is why I suggest the beginners to focus only on Euro and GBP and try to take positions, because in the case of denominator currencies, they make the one-sided moves. Like from 105 to 103, they simply made the drop in the case of USD Yen. If you are caught on the wrong side, then you need to know the strategy, how to come out of it. Otherwise, you will be simply cutting losses. But whereas in the case of Euro and GBP, we simply hold a sell or a buy position. We wait for 2-3 days, you will be able to get profit booking opportunity. Or you can do a simple averaging every 150 pips rise, and then when they drop, close it with 75 pips profit, no loss can be seen in such trades. Whereas in the case of the denominator currencies, you need to know the trend well. Then how about reversal in Euro and GBP? Reversal is expected to happen next week, because it is the trend reversal time. This week they will try to gain the level. Last week they have been doing lower level consolidation, and only on Friday they gained the level. From Friday they will continue the level till Thursday, and Friday there will be a quick gains and profit booking. Then Monday they could open low and start making the slide. Okay then. No more questions. So I take this opportunity to thank everybody who have come here to listen to my webinar. Why do you trade in mid sessions? No, I don't take positions during mid sessions. I take only during the late sessions. Mid session we can take positions in the case of crosses. I give advice to my clients when to take positions in the case of crosses. PUD predicted 85. How much high it will? Yeah, it could rise to 82, 83 area and then come down to 85 slowly during the year. And okay, fine. No more questions. Thank you one and all. See you on Thursday. I'll be presenting 3 webinars on that day. I'll try to give the forecast and track along with you the market during the Japanese session and also during the European session. If you participate in all the 3, you'll be able to understand how I am tracking the market at ease using the live market code page. Thank you one and all. See you on Thursday. Wish you all very happy trading.